Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, welcome back. You're watching Power Breakfast. Now let's shift focus to our market. Yesterday on the Wall Street, major indices, all of them shed more than 1% in afternoon trade. Late trade was when we saw the acceleration in the decline. The Nifty breached the 10,450 mark. The Sensex tanked more than 300 points. Broader markets, while they relatively outperformed, the advanced decline weakened by the end of the day. The SGX Nifty is indicating a mild green tick, but for all the cues that we need to watch out for today, that's here. Ekta.
Well, yes, like you mentioned, Mangalam, it was a weak session for us yesterday. So the markets did correct more prominently in the second half of the trading session. So the Nifty slipped below 10,450, the mid-cap index fell 0.5%, and the FIIs continued to do what they've been doing for many trading sessions now, that is selling in the cash market. So the FIIs net sold 311 odd crores yesterday. DIIs net bought double of that, almost 790 odd crores. Now remember that the Nifty is corrected over 450 points from that May 15th high of 10,929, and the Nifty is now below its 20-50 as well as its 100-day moving average, and the three averages should come up on your screen. So the next level to watch out for would definitely be the stands at 10,328. Most of the experts are probably pegging the Nifty range in the medium term to be anywhere between 10,350 to 10,650. So that is definitely a come off from the earlier range that we were trading in the past 2 weeks odd, which was around 10,500 to 10,700 odd. Now in terms of cues today, the US markets, yes, they've closed higher. The Fed minutes have indicated a willingness to let inflation run, so that's a positive. Asian markets were mostly in the green at this point in time, but let's see what the SGX is indicating, and that should come up for you in just a couple of seconds. There is definitely a risk off which is taking place globally, but as you can see, the SGX is just about flat with a positive bias at this point. In terms of macro cues, the Brent crude levels still hover around $79 to $80 per barrel. We still have that weakness coming in from global currencies. We've been talking about the Turkish lira, even the other currencies such as the Philippine peso is at 12-year lows. So the rupee weakened further, closed at 68.42 yesterday. Bond yield still at 7.85. So those are key macro cues to work with. In terms of results post markets, it was a disappointment from Tata Motors, and for results today we have GAIL, United Spirits, Pidilite, Cummins, Cochin Shipyard, a couple to watch out for. It is also the Nifty Bank weekly options expiry today. Watch for the mid-cap index underperformance. It continues down 9% month to date, so let's see what's in store on that front.
Absolutely, but you spoke about a lot of stocks. The other stocks to watch out for would be?
Well, in terms of result reactions, Tata Motors, I already mentioned that one. Then Jet Airways reported a loss this quarter of around 1,000 odd crores. Also, the auditor has brought up issues. They have concerns with regards to the company's ability to generate cash flows to meet its obligations, also to raise funds to meet its financial support. So not a good thing, especially with Brent at $80 per barrel. Other reactions include Gen Irrigation, KPIT, eClerk, Suntech Realty, Natco Pharma, good numbers coming in. Shalimar Paints has approved a rights issue. NMDC has fixed their lump ore prices at 3,050 rupees per ton, and Vedanta says that they've appealed to the government and authorities to ensure the safety of employees and facilities in terms of what's happening with their copper plant. And Fortis, Manipal TPG, has extended the date for the offer from the 29th of May.
Based on CNBC, getting early rates come by from the Hang Seng, and that one is indicating a mildly red tick, so about 37 points at the lower end for the Hang Seng. Remember, it opened in the green, has now swiftly moved into the red. The Nikkei is still continuing with a cut of almost 300 points. Stronger yen as well as concerns over US auto imports are the ones which are taking the Nikkei down. The SGX Nifty, however, still holding its head above that flat line. 18-point uptick is what we are expecting. Let's move on then. Spiraling fuel prices, they continue to be in focus. Petrol and diesel prices have risen for the 11th straight day, hitting record highs and hitting the wallets of consumers. With this revision of 30 paise a litre, petrol price has surged to around 85.29 rupees per litre in Mumbai. Diesel price too in the city has gone up by another 20 paise to hit 72.96 rupees per litre. As these prices soar, the central government is yet to take a decision on relief measures. In fact, Law and IT Minister Ravi Shankar Prasad yesterday confirmed a CNBC TV18 news break that the government is indeed working on a multi-pronged strategy. He added that the government plans to take a long-term view to provide relief to consumers. So far, none has come. We'll keep an eye out on that.
In view of the uncertainty in the crude prices globally, a new sense of urgency has developed. The government is keen that instead of having an ad hoc measure, it may be desirable to have a long-term view which addresses not only the volatility but also takes care of the unnecessary ambiguity arising out of frequent ups and downs.
All right, and moving down south then, Tuticorin, that one continues to remain tense after one more person was killed in police firing as anti-Sterlite protests continued yesterday. The latest casualty has taken the death toll to a total of 12. This after the police opened fire at angry protesters who are opposing the expansion of Vedanta Group company Sterlite Copper's plant in what is being seen as a massive intelligence failure. Both the superintendent of police and the district collector of Tuticorin have been transferred, while Section 144 continues to be imposed. In the latest developments, what we're learning is that internet services have also been suspended. Last night, the Tamil Nadu CM Palaniswamy met with the state governor to brief him on the alarming situation in the city. The Ministry of Home Affairs has also sought a report from the Tamil Nadu government over the worsening situation in Tuticorin. One member of the Judicial Committee has also been set up to probe the situation in Tuticorin. And on the back of this, we also spoke with P. Ramnath, the CEO of Sterlite Copper, on the back of these mounting protests in Tuticorin. He says that he cannot understand why the protests have intensified despite the plant being committed to environment laws. Listen in.
Our plant has been operating in total commitment, total compliance with environmental laws for several years, and our plant has been shut down for a major shutdown since the end of March. I don't think there has been no reason for these kind of protests. We have been reaching out to the villages. We've been reaching out to the protesters. We have advertised in the newspapers saying that seeing is believing. So we have invited them to our plant so that they can themselves take a look at the various kind of measures that we have taken up. But the protesters have not taken up our offer. They have refused.
Okay, and the Union Cabinet has amended the Insolvency and Bankruptcy Code, the IBC as we know it, via the ordinance route. And even as the President's approval is awaited, there is good news in store for the aggrieved home buyers. CNBC TV18 learns that the changes in the IBC entails home buyers to be treated as financial creditors. Now, this is a big positive for small and medium scale enterprises. The Cabinet has said that the MSMEs will be exempt from all conditions under Section 29A. However, legal experts are still divided over these amendments. While some of them believe that these changes will improve the insolvency process, others are of the opinion that these amendments were not needed. Hear them out.
The home buyers, once they get seat on the committee of creditors, they get the voting right, and in my view that protects a lot of interest because they become a party to approving any resolution plan. Let us assume that they do not approve of some plan and they become the dissenting creditor. In that case, as a dissenting creditor, under the law, they will be entitled to priority of payment, of course equal to the liquidation value, but before any other financial creditor is paid. So their interest is taken care of. A lot of relief, according to me, has been given to the home buyers by making them as a financial creditors.
I mean, MSME, I can't understand this whole concept of MSME because what are you talking about? You're saying that people who have investments in plant and machinery of 25 lakhs, that's the definition of MSME in the government, or a turnover of 5 crores. I mean, these are not people who are going to get impacted by IBC. Anyways. I mean, they will get impacted, but they will hardly make a difference to situations. I think the definition that was required for exemption in the 29A were companies which have a turnover of maybe, a total loan of maybe 250, 300 crores. So that is the kind of company which is really going to get impacted, which is run by a promoter.
Okay.
and which does not have a replacement. And somehow, we stuck with this MSME definition. I don't know why.
I don't think any of them are kind of require such staring urgency. In terms of, I think, 2-year conviction is not very routine for most cases, and it requires conviction. It's not an allegation. It's not an FIR. So it would not cover too many people. So I think it's kind of the issues which they've resolved are the low-hanging fruits. 29A certainly does require some rework. But my guess is it will require a little more practical experience before they kind of rework, because it's been a very major amendment to the Act itself.
The second proposal, which hasn't come through apparently, is the fact that if the Committee of Creditors voted in favor of it, then you could take a case outside of IBC, even an ongoing IBC case. And there are 2 live examples where this would have been very helpful. First is Binani, because there's a bid which the Binani lenders have got, which they would rather have approved outside of IBC at the parent level, at the Binani industry level. So if 90% of the COC wanted to do so, they could have taken it outside of IBC. And second is RCOM. So in RCOM, Ericsson has filed the IBC case, and they, as operational creditors, are not likely to make much of in the liquidation waterfall. And the lenders were completely against this. So if this change comes through, then probably in cases like RCOM, where the financial creditors don't want the company to go into IBC, can vote by 90% and reverse the IBC trigger.